Hello students, a warm welcome to all of them. I hope you all are doing good and fine. As in the previous session we had completed our chapter 2. In today's session we'll be starting with a fresh chapter, the chapter number 3, that is investment income. So let's start the chapter. So first we will be discussing what are the learning objectives, what all we will be studying in this chapter. Compute the tax payable on saving and dividend income. As in the previous session we had seen the tax paid on the non-saving income, we'll be seeing the tax amount paid on the saving and dividend income. Recognize the treatment of individual saving accounts and other tax exempt investments. The ISA account will be doing the further rules. As in the first chapter we had covered that any income which we receive from the individual saving account is exempt, and there I mentioned that we will be learning some further rules in the chapter number 3. So today we will be covering those further rules. Understand how the accrued scheme applies to UK government securities. Prepare a basic income tax computation involving different types of incomes, that is non-saving, saving and dividend income. Understand how a married couple or a couple in civil partnership can minimize their tax liabilities, that is tax planning. Means these both are tax planning questions. We'll be doing some tax planning question, how an married couple can minimize their tax liability. So moving further, today we will be starting with the saving income tax slabs. So before that we'll be discussing the basic format which we had discussed in the previous session. So the income tax format, an individual has three types of incomes: non-saving income, saving income and dividend income. This gives rise to total income. Trading income, employment income, pension income and property income are non-saving income. Saving income is a separate head of income. Saving income includes bank interest, building society interest, other interest. Dividend includes dividend which we receive from the company. Today in the chapter number 3 we will be covering these two topics: the taxation related to savings and dividend income. We after then we'll get our total income. From the total income, if we reduce our relief, we will be getting our net income. From the net income we'll reduce our PA to arise at our taxable income. The income tax liability is calculated on the taxable income. Total income tax liability, the total income tax liability is calculated on the taxable income. As in the previous session we had seen the calculation for the non-saving income. We had the rates of 20, 40 and 45. The method for the calculation of the non-saving income will be the same for the saving income and also the dividend income. As I would give a small example, and so that you understand how the income is calculated. As in previous session we had discussed the rule concept, that is till this amount this much tax, till this amount from 0 to 37,700 will be taxed at 20%. From 37,701 to 125,140 will be taxed at 40%, and above 125,140 will be taxed at 45%. Now take an example that an individual has non-saving income of 10,000 pounds. So it will be taxed at 20% as he is in the basic rate band only. The amount is within the basic rate limit only, the taxable income. This is taxable income. Now an individual has a further 10,000 pounds of saving income. So this 10,000 pounds will be in the basic rate band only. This, the cumulative of this from 0 till 37,700, then further 1250 will be like a ruler, and till here you have a non-saving. Then further from here you will be calculating your saving income, then from here you will be calculating your dividend income. So you had a good and approximate idea. This 10,000 will be taxed at 20% only, because the limit is what is the limit for basic rate? 37,700. The 10,000 is also falling in this only, the non-saving income, and the saving income is also falling in this 37,700. So we'll be calculating at 20%. Now we will be looking into the brief tax slabs and the tax rates for the saving income and the dividend income. So first we will be doing for the saving incomes. Let's start with the savings income. Saving income tax slabs. The first point we need to remember that an individual is taxed on the amount of saving income received in the tax year. Means in accounting books we follow the accrual system, that whether we receive or not we will be recording our interest or the expense. But when it's come to the tax, you will be taxing your income when you receive it. What are the types of saving income? Bank interest, building society interest are the types of saving income. So bank interest, when the bank pays you the amount, example that you had a bank interest of previous year 1,000 pounds, but bank did not pay you the previous year. In the current year they are paying you, the bank is paying you in the current year, so this will be taxed in the current year. What does it says? An individual is taxed on the amount of saving income when he receives in the tax year, whether it pertains to any year, in which year you are receiving it, in which year the amount is getting credited to your bank account, in that year you will be taxing the interest, the saving income. So clear with this? So this is the basic rule you need to remember. Now we will be starting with the tax slabs and other things. Saving income is normally taxed in the same way as non-saving income at basic, higher and additional rates of tax, that is 20, 40 and 45. The same rates are there, and it is the same way of calculating. The saving incomes is calculated in the same way as the non-saving income. However, here you need to follow an order. First you will be calculating the tax on the non-saving income, example 10,000. After that you will be having further 10,000 saving income. You need to follow an order to calculate the tax on saving income, because in saving income, as we had seen in a previous chapter, that we have a 0% rate also. In the chapter 1 at the starting, see here the income tax rates, we had seen that the saving income has a 0 rate band also, and dividend income. So these are very important, we'll be studying this. So because of this we need to follow an order so that we do not confuse with the calculation. So how to start the taxation for the saving income? However, a starting rate of tax of 0% applies to all taxpayers where saving incomes fall into the first 5,000 pounds of the taxable income. This is an special rule for the saving income. Special rule for saving income. It is not there for non-saving and dividend income. This rule is applies for only for saving income, and only saving income has this special rule. What does this special rule says is that now you are having the 5,000 pounds income. Now example, okay, you are having 5,000 pound income of saving income from this 10,000 you are totally having. If this 5,000 income is falling in the falls into the first 5,000 of the taxable income, that is taxable income. So we'll be having what? Taxable income includes the total of non-saving, saving and dividend income. Am I right? So the rate of tax will be 0 on the amount of 5,000. On the amount of 5,000. So let's take an example. Non-saving income and saving income and dividend income. Non-saving you have 2,000. This is your taxable income. Non-saving. You have here 3,000 and dividend you have 0. So this is taxable income, means you have reduced your PA. So this will be taxed at 20%. So will be 400. Now what the special rule of saving income says is that, however, a starting rate of tax, that is 0% tax will apply to all taxpayer where saving income falls into the first 5,000, into the first 5,000 of the taxable income. So my 1 minute, 2,000, 3,000 tax was, this is taxable income. So tax was into 20% for non-saving income, that is 400. And now the saving income falls into the first 5,000 of the taxable income. What is my total taxable income? My total taxable income is 5,000, and my saving income is following within the first 5,000. It is following within the first 5,000 of the taxable income. So what will be the tax? The tax rate will be 0 for this. That is 3,000 into 0% will give rise to 0 tax on this. This is a special rule which is only available for saving incomes, not for dividend income and non-saving income. So but the amount, this will be included, this amount, the 3,000 will be included in the limit of 37,700. That is, so from 37,700 you have already used 5,000. So you have already used 5,000. So what is the leftover amount on which you can tax at 20%? That is 32,700. This is the basic limit you still have. So this will also use the basic rate limit. So let's take other example. For example, my non-saving income is, and my saving income and dividend income. Non-saving income is 6,000, saving income is 1,000, dividend income is 0. This is taxable income. So taxable income is, what is the total of the taxable income? The total of the taxable income is 1,000 plus 6,000 is 7,000 pounds. So non-saving income will be taxed at 20%, and it is within the basic rate limit. So how much will be the tax? 1,200 will be the tax. Now saving income. Okay, now saving income. Saving income, what is the first rule? We must see whether our saving income falls into the first 5,000 pounds of the taxable income. What is our taxable income? Our total taxable income is 7,000. In that, already 6,000 is of non-saving income. So what is the first? 6,000 non-saving we have. So it is the saving income of 1,000 is not following, it's not within the first 5,000 of the taxable income, because from the 7,000 the first 5,000 is covered by non-saving income. So this rule will not apply. So this rule will not apply. So the special rule will not be available of the saving income. Special rule of saving income will only be available if an individual's saving income falls within the first 5,000 of the taxable income. Taxable income is the total of NSI, SI and dividend, and this order needs to be followed. NSI is the first, second is the saving, and third is the dividend income. So if NSI covers the 5,000 amount, if my NSI is, my non-saving taxable income is 5,000, if my non-saving taxable income is 5,000 or more, this special rule will not apply to saving income. Clear with this? Clear with this? So now we will be further moving to the second criteria. The first rule we have learned, the special rule for saving income. Now in addition, basic rate and higher rate taxpayer are entitled to a saving income nil rate band. As in the tax slab we have seen that the saving income and dividend income has a 0% nil rate bands. So those we will be studying here. The saving income nil rate bands are available for two types of taxpayer. Basic rate taxpayer has 1,000 pounds of nil rate band. Nil rate band means 0% tax on that. Higher rate taxpayer means, for higher rate taxpayer means the 500 limit is available, so 0% tax on that. So we will be revising this concept again. What does this say? First you will be seeing whether the starting rate tax of the 5,000 rule will apply or not, the special rule for the saving income. If it is not applying, then you will be moving further to the nil rate bands, saving income nil rate bands. Nil rate band means on this amount you will be, on this amount zero tax will be paid, zero tax amount. So for a person who is a basic rate taxpayer, he will be getting a saving income nil rate band of £1,000. For a higher rate taxpayer, he will be getting a nil rate band of £500. If a taxpayer is an additional rate taxpayer, he will be getting nil. He will not be having any nil rate band. Zero. Zero is the nil rate band. For saving, for the basic taxpayer is £1,000. For higher rate taxpayer is 500. For the additional rate taxpayer is 0. So let's take a example. Keep in mind, the saving income nil rate band depends upon the type of taxpayer he is. How we will be determining whether what kind of taxpayer he is? Remember in the chapter 1, chapter 2, we had discussed that for determining whether he is a basic rate, higher rate or additional rate, you will be seeing the total taxable income. Total taxable income. Total taxable income includes non-saving, saving and dividend income. Excuse me. If the total taxable income is within the limit of 37,700, he will be a basic rate band, basic rate taxpayer. If it is between 37,700 to 125,140, he will be a higher rate taxpayer. Above 125, 140, he will be a additional rate taxpayer. You must see what is the total taxable income to determine the saving income nil rate band available to an individual. Let's take an example. Non-saving income, saving income and dividend income. Example 10,000, 3,000 and 0. So non-saving income, this is your taxable income. So your total will be £13,000, correct? This will be taxed at 20%. So it will be £2,000 your tax. Now we will be moving to the calculation of income tax for the saving income. For the saving income, first we must see whether the saving income falls into the first 5,000 of the taxable income. Here the first 5,000 taxable income is non-saving, which is more than 5,000. So the special rule will not be available for the saving income. Now we will be moving to the saving income nil rate band. So what is the saving income nil rate band which will be available? First we need to decide what type of a taxpayer he is. To determine what type of taxpayer, we need to see the total taxable income. The total taxable income for the individual is 13,000. This is within the basic rate limit, that is £37,700. So within the basic rate limit, he is a basic rate taxpayer, so he will be getting a nil rate band of 1,000. So on this 3,000, 1,000 will be taxed at zero rate, so zero tax. So the further 2,000 will be taxed at what rate? Will be seeing that. In summary, the rates of tax on saving income are this. First you will see special rule applies or not, whether the saving income nil rate band is available. In our case, the saving income nil rate band is available 1,000 because he is a basic rate taxpayer. For higher rate taxpayer, it will be 500. In this case, we will take an example. Our saving income is 43,000. Then he will be a higher rate taxpayer. For the higher rate taxpayer, he will be getting only 500. The 1,000 will not be available. So let's take 3,000 only for our example. For example, I gave this. So 13,000 is our total taxable income. Now 1,000 will be taxed as nil rate band is available. Now further the 2,000, how this will be taxed, we will be studying that. Here as it is mentioned, the saving income is normally taxed in the same way as non-saving income at 20, 40 and 45% based on the basic, higher and additional rate. As before the starting of the class, I gave you example, it will be working like a ruler. The till 37,000 this, then above this and above this amount will be paid. So saving income was only £1,000. still we have the limit of the basic rate limit, but the basic rate limit will be covered by everything. Whatever amount we tax, this zero also will be covered, and this basic rate, the nil rate band also will cover it. So 10,000 has been covered. So what is the basic rate limit still available to us? 27,700 is available, because from the 37,700 pounds, the 10,000 has been used by the non-saving income. Now from the 27,700, 1,000 is also used. 1,000 is also used at 0%. So the what is the available basic rate band available to us still? 26,700. So still the amount, the saving income of 26,000 or the dividend income will be under the basic rate limit. So this 2,000 is still in the basic rate limit. This will be taxed at 20%. So it will give rise to 400 as your income tax on the saving income. So your total income tax will be 0 and 400. So clear with this? So we'll be seeing the special rule first, then we'll be seeing the saving income nil rate band. For basic rate taxpayer it is 1,000 pounds, for additional rate it is 500, for higher it is 500, for additional rate taxpayer it is nil. In summary, the rates of tax on saving income. Following, first you will be doing the special rule. After the special rule, you will be seeing the saving income nil rate band. After the nil rate band, the excess amount will be taxed at the same way as the non-saving income, same as non-saving, that is within the basic rate limit. First 37,700 at 20%, higher rate 37,701 to 125 140 pounds will be taxed at 40%, additional above 125 140 will be taxed at 45%. Saving income nil rate band are 1,000 for basic rate, higher it is 500. Note, a starting rate of 0% applies to saving income where it falls within the first 5,000 of the taxable income, as we have covered this year and this is covered here. So we have done with this, and this is, and we will be revising this also. Set off of reliefs and the personal allowance. As in our chapter 1 we discussed that the, as in our chapter 1 we had discussed, as in our chapter 1 we had discussed that set off of reliefs and personal allowances. How will our personal allowance and reliefs will be set off? There was an order, you need to follow that order. What was the order? Non-saving, saving and dividend income. Remember that in the tax examination, the personal allowance and the reliefs are deducted from income in the following order, that is non-saving income, saving income and dividend income. This order needs to be followed for the reliefs and personal allowance, as we had already discussed this in chapter 1. So from which amount you will reduce your relief? That is total income. Total income, you will reduce your relief, you will be getting your net income. From the net income you will be reducing your PA to get your taxable income. Clear with this? We have completed this also. The saving rate, saving, an individual is taxed when he receives the year, in the tax year when he receives the amount. Special rule, that is 5,000. If first 5,000 of the saving income falls, if the saving income falls into the first 5,000 pounds of the taxable income, will be taxed at 0. Further, you have nil rate bands for the saving income. If he is a basic rate taxpayer, 1,000 is available. If he is an additional rate, 500 pounds. If he is a higher rate, sorry, my mistake, if he is a higher rate taxpayer, 500. If he is additional rate taxpayer, 0. Then the same rules as saving income will be, the rest income of the saving income will be taxed as the same way as the non-saving income. So we'll be starting with this. So this contains a basic explanation. Whatever explanation I gave, the whole thing here is the explanation, which I will go through this once, so that you have a better understanding, and we'll solve 2 to 3 questions, so the concept is very clear. See, apply the appropriate rates of the tax saving. What is the approach? What will be our approach to calculate the tax for the saving income? As I told, will be following in our order. The special rule, that is the starting rate of 5,000 pounds. If the saving income lies within the first 5,000 of the taxable income, zero tax, but the 5,000 will reduce the basic rate limit, that is 37,700. If this is not available, the special rule is not available, we will further be moving to saving income nil rate band. What was the saving income nil rate band? 1,000 pounds for basic rate taxpayer. For higher rate it was 500 pounds, and for additional rate taxpayer it was 0. How we will determine which type of taxpayer is? By seeing the total taxable income, whether they fall within the limit of 37,700 or above 125 140. If between 37,700 to 125 140, it will be higher rate taxpayer. If within the limit of 37,700, he will be a basic rate taxpayer. So we have done with this, and the normal rates, basic, higher and additional rate, as we have seen in the non-saving income. The same rules apply for the saving income also. Saving income is taxed as the next slice of income after non-saving income. As I mentioned in the rule, till 37,000 is the limit. Then above that you have a higher rate, basic rate and additional. Till here you have your non-saving income. Then you have your saving income. So what they are saying, the saving income is taxed as the next slice of the income. After NIC, you will be getting your saving income. So this also falls under the basic rate limit. You need to calculate the tax as a ruler. Ruler means scale. After this income, this amount, this will be taxed. Non-saving income, employment income, trading income, pension income and property income. Therefore, the rates of tax applicable to saving income depends on the level of taxable non-saving income. Because why saving income rates will depend on the non-saving income? Because we will be taxing first the non-saving income, then we will be taxing the saving income. Because if the non-saving is greater, it will consume your nil rate, it will consume your basic rate limit, the 37,700. If your non-saving income is above 125 140, then your saving income will be taxed at 45%. Whether you earn 1,000 pounds or whether you earn whatever amount, will be taxed at 45%. So we'll be seeing the approach. Starting rate, this only applies if fairly limited situation. This is special rule where taxable non-saving income is less than 5,000. As I told, the saving income must fall within the first 5,000 pounds of the taxable income. For this case, the non-saving taxable income must be lower than 5,000. So then only the special rule will apply. Special rule only will apply in this case. If the 3,000 is your non-saving income, taxable income, only you have 2,000. This 2,000 of saving income will be taxed at 0, not the whole 5,000. What is the amount that is available within the first 5,000 of the taxable income? The amount left is 2,000. Clear with this? No taxable non-saving income, the first 5,000 of the taxable saving income is taxed at 0. If no taxable saving income is there, the whole 5,000 of the saving income will be taxed at 0%. The first taxable non-saving income is below 5,000, saving income falls into the rest of the first 5,000 is taxed at 5%. This example we have given here. This non-saving is this amount, the saving is the leftover amount is 2,000. This will be taxed at 0% for the saving income. Taxable non-saving is in excess of 5,000, the 0% starting rate is not applicable. Clear with this? The special rule for the saving income. So will be, if this does not apply, then we will be moving to the saving income nil rate band. If there is a further saving income of tax, considering the saving income nil rate band, if the taxpayer is a basic rate taxpayer, for basic rate taxpayer, the next 1,000 pounds, falls in the saving income nil rate band, is taxed at 0%. Now in this case, the 2,000 is done. The first special rule is done. Now we further have nil rate bands. This you need to follow in order. This does not mean that if this is not applicable, this also will not be applicable. No, 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 no. This is applicable, this also will become applicable, this also will become applicable. So in the second, we'll be seeing the nil rate bands available. For the basic rate tax paid is 1000, falls in the saving income, nil rate band is taxed at 0%. And when we come to the, for the higher rate taxpayer it is 500, the next 500 falls in the saving income nil rate band and is taxed at 0%. This 2000 we have already given the special rule of this, but for further see, this 2000 we have given the special rule. We have saving income of 10,000 pounds. We have already done with this special rule. Now we have left over is 8,000 pounds. For these 8,000 pounds, you need to see whether the nil rate bands are available or not. If the nil rate bands are available, please do use it and tax at 0%. For basic rate taxpayer, it is 1,000 pounds. For higher rate taxpayer, it is 500 pounds. An additional rate taxpayer, that is taxable income, is 125,140 pounds or more. The saving income nil rate band is not applicable. If he is a additional rate taxpayer, what does additional rate taxpayer means? If his income is more than 125,140, taxable income is 125,140 or more. To determine whether the taxpayer is a basic, higher or additional rate taxpayer, ascertain the highest tax band that is his or her or their taxable income falls within. We must see the total taxable income. The total taxable income will fall within which type of rate, the band, the higher rate, basic or additional. For example, a taxpayer with a taxable income of it will not look clumsy, so I am erasing a little bit. Okay. For example, to determine a taxpayer with a taxable income of 45,000 pounds is a higher rate taxpayer, as the individual has taxable income falling into the higher rate band. What is the higher rate band? 37,701 to 125,140 pounds. So after this, we are, as our income, first we saw the 5,000 rule, then we saw the nil rate band which are available. Further, if any income is left, will be taxed at the normal rate. What are the normal rate? If there is further saving income to the tax, apply the normal saving rate as follows. Basic rate 20% applies to saving income falling with the basic rate band, first 37,000 of the taxable income. So the bands, that is 37,000 sound, is for the total taxable income. Don't confuse that only it is for non-saving. No, no, no. This, the bands 37,700, 125 are for the total taxable income. So for basic it is at 20%. Higher rate of 40% applies to saving income falling within the higher rate band. What is the higher rate band? Taxable income in the range of 37,701 to 125,140. Additional rate of 45% applies to saving income where taxable income exceeds 125,140 pounds. If this exceeds, you will be taxing 45. Same rules as non-saving income. Saving and non-saving and saving income, same rules. But these two rules are special for saving income. Note that the basic rate band and higher rate band are the first reduced by non-saving income, as we have already done many examples. Note that the basic rate and higher rate will be reduced first by non-saving and then by saving and then by dividend income that has been taxed at a starting rate and the saving income nil rate band. How will be the basic rate band 37,700 will be reduced? First it will be reduced from the non-saving income, then from the saving income. In saving income also we have the order. Starting rate, that is 5,000 pound rule, at 0, then nil rate band at 0, then the rest of the saving income. This is the way the limits of the bands will be reduced. And then further dividend. In dividend also we have a nil rate band. We'll be studying further and then rest of the dividend income. This will be studying further. The above procedure may seem complicated, but if you see the layout, the above procedure may seem complicated, but if you see the columnar layout of the income tax computation see below, it is relatively easy to determine the rates of which rates to apply. Means the layout will be column wise, as we have studied the non-saving, saving and dividend income. So they are saying the column layout will be formed in the formula. Sorry, my pronunciation is wrong, please do forgive me here. The layout will be formed in the columns, this non-saving, saving and dividend income. So as we are clear with the rules, we will now be starting with the questions so that you have a better understanding. Please do revise these rules before we start solving our questions. Please do pause, and if any doubt, please do ask in the WhatsApp group, the number which I have shared in the previous class. So please do revise the rules, pause, and please do revise the rules so that you have a better understanding, so that we can start our question solving. So I am giving a time of 2 minutes so that you can please revise the rules so that we can start our question practice. So done with the revision of the rules, we'll be starting with our question solving. This is a very interesting area. You need to focus so that and practice a lot of questions, students, so that you have a better grip on the rules and regulations. So we'll be starting with the first question. X receives bank interest of 3000 during the tax year 23-24. X receive bank interest of 3000. This is saving income. This is saving income of 3000 during the tax year of 23-24. Compute X income tax liability assuming S has an employment income in the tax year of 11,000, 15,200 and 29,000. So this we have saving income of 3000 and employment income of 11,000 or 15,200 or 29,000. We need to solve for each of the case differently. So we will be first solving the A. In that A, we have our employment income as 11,000 pounds. Second, saving income will be of 3,000. Done with this, and further the B part, employment income will be 15,200 pounds and saving income will be of 3,000 pounds. And further the employment income will be 29,000 pounds and our saving income will be 3,000. That is interest income. This is non-saving. Employment income is a non-saving. So let's start with this calculation. So the same format we used to follow in the calculation of the non-saving income. Non-saving income, saving income and dividend income. So non-saving income is employment income. What is our employment income? That is 11,000. Saving income is 3,000 pounds. Dividend income is 0. Oh no, 0. Our saving income will be writing a bank interest, which will come under the head of saving income. So our total income for each category will be total income. For each category it will be 11,000 pounds, 3,000 pounds and 0. After getting our total income, we'll reduce any relief. Relief is available? No relief is available. Relief will be reduced in which format? Will be set off against the same format, non-saving, saving and then dividend. After reducing the relief, we will be getting our net income. Our net income and total income will be the same because no relief is available. 11,000 pounds. The basic saving income will be 3,000 pounds. After this, we will be reducing our personal allowances. Personal allowance will be reduced to get our taxable income. So we'll be doing the total of the column also so that we can decide what kind of taxpayer he is. 0. This will be 11,000. This will be 3,000. 0. This will be total 14,000. And this will be all the total of 14,000. Clear with this? Now, personal allowance. What is the format for reducing the personal allowance? What is the order? Excuse me. What is the order for reducing the personal allowance and the relief? In the same order, that is non-saving income, saving income and dividend income. For the personal allowance, we need to see whether the personal allowance get tapered or not. Our income is not more than 100,000 pounds. So personal allowance will be available or full. So what is the amount of personal allowance that will be available? That is 12,570. But our saving income is only 11,000. So our saving income will be taxable saving, non-saving income will be 0. And the rest, what is the rest amount? That is 1,570 will be reduced from this. So our saving income, our taxable saving income will be 1,430 and dividend, no dividend income, so it will be 0. So our total taxable income will be 1,430, 1,430. Now we need to calculate the income tax liability. Income tax liability is calculated on the total taxable income. Our total taxable income is 1430 pounds. So income tax liability will be first calculated for the non-saving income. Our non-saving income taxable income is 0. So non-saving 0, because no taxable income. For saving income, now after calculating the income tax liability for the non-saving, we will be calculating for the saving income. So saving income, we have the order, that are the 3 rules. First is the 5000 rule. Now see whether the saving income, saving income taxable income falls within the first 5000 pounds of the taxable income. Our taxable income is 1430, and we do not have any non-saving income. We do not have any taxable non-saving income. So the 5000 pound rule will be available. So for the saving income, 1430 into 0%, that is 0 tax. So our income tax liability will be 0. Why? Why? Because saving income falls within the first 5000 pounds of taxable income. First 5000 of the taxable income. So clear with this? So now you will be having a good understanding how we did this. So clear with this? Now we need a little bit more space so that we can perform the calculation in a we can present it properly. For but section B and section A, you need not present your answer, only you need to calculate and give your answer. So for the B part, what was our employment income? Non-saving income was 15,200. Then saving income was saving income was 3,000. We applied here the 5000 rule. The 5000 rule, pound rule, says saving income must fall within the first 5000 of the taxable income. What is our total taxable income? 1430. So this is following within this our saving income is following within the first 5000 pounds. So what is our this? Our total taxable income is 1430. So we don't have any non-saving income. When we do not have a non-saving income, what was the rule? See here, students. See here, what rules we studied here for this non-saving income, no taxable non-saving income. So first 5000 of taxable saving income 0. Taxable non-saving is below 5000. So whatever is the rest amount will be taxed at 0. If taxable non-saving income is 5000 in excess of 5000, then the special rule of will not be available. So now we'll be doing for the second case, non-saving income, saving income and dividend income. Employment income is a non-saving income 15,200. Saving income is 3,000 pounds. Dividend income 0. Saving income is 0. Saving income, that is bank interest, will come under the head of saving income, that is 3,000 pounds. Dividend 0. So dividend income is also 0. So by doing this, we will be getting our total income. What will be our total income? Our total income will be 15,200, 3,000 and 0. So from total income, we'll be reducing our relief. Any relief is given? No, nothing is mentioned. So we'll be getting our net income. Net income will be 15,200, 3,000, and for dividend it will be 0. From the net income, we will be reducing our personal allowance. Let's calculate the total. This format is very needed, and you need to, in the same format only, you need to do this. So what is the non-saving? 15,200 here, 3,000, 0. So our total, this will be 15,000, 18,200. No relief. So our net income will be 18,200. Less PA. PA, we need to see whether our PA is getting tapered or not. Our income is not exceeding 100,000 pounds. So it will not get tapered. 12570. Keep in mind that personal allowance, if your income is exceeding 1000 pounds, directly calculate the ANI and see whether the rules of the further rules of the PA apply. Whether the ANI is below 1000 pounds, it will be 0. If it is 125, 140 means no PA will be available. If it is below 100,000 pounds, full PA will be available. Above 125, 140, no PA will be available. Between 100,000 pounds and 125, 140, you need to apply the rule. What is the rule? ANI minus the limit. What is the limit? 100,000 pounds divided by 2 or into 50 you can do. 50% into ANI minus the 100,000 pounds. That amount will reduce your PA. So here our income is not exceeding, so we'll not reduce it. So we'll be getting our taxable income. As personal allowance will be reduced in the which order? Non-saving, saving and dividend. As the personal allowance whole get reduced at the non-saving only. So what will be our taxable income for the non-saving? It will be 2,630 pounds. For saving income, it will be as usual, because personal allowance is used by the non-saving, so dividend will be 0. So our total taxable income will be 2,630 plus 3,000, that will be 5,630. So this is our total taxable income, and we need to calculate our income tax liability. Income tax liability is calculated in which manner? Is calculated on the total taxable income. And in this total taxable, we have 3 rates, 3 subdivision NSA. First will be calculated for non-saving income. Non-saving taxable income is 2630. This is within the basic rate limit. So into 20%. So we'll be getting 526 as the income tax on non-saving income. After non-saving income, we will be calculating the tax for saving income. Saving income. What is our total saving income? That is 3,000. Now for saving income, we need to see the first 5,000 rule. The saving income, the saving income of is within the first 5,000 of the taxable income. So what is our taxable income? The taxable income is, total taxable income is 5,630. In that 2,630 is covered by non-saving. So we are still left with a certain amount. What is the certain amount? 5,000 minus 2,630. So 2,370 is the amount available after reducing from the non-saving income. That is 5,000 less 2,630, because non-saving income is only 2,630. So this amount will be taxed at 0%. So 3,000 of 3,000, this 3,000, 2,360 will be taxed at 0, because the saving income falls within the first 5,000 of the taxable income. First 5,000 of the taxable income. 2,360 minus 5,630. And what is the rest amount? 3,000 minus 2,370. This will be 630. This 630 we must see the further. Now first we saw the first 5,000 rules. Then we must see the nil rate bands. What are the nil rate bands? What are the nil rate band? What is the nil rate band available? Nil rate band, we must see what type of taxpayer he is. What is the total taxable income? The total taxable income is 5630, which is within the basic rate band. So for basic rate band, what is the nil rate band? 1000 pounds will be taxed at zero rate. So this will also be taxed at zero. So 0. So the total income tax liability will be 526, because for saving income it is covered by the first 5000 pound rule and the special rule and the nil rate band. Clear with this? So further we'll be doing one more question, the sub question, that is part C. So C part, in which our employment income was, what was our employment income? Our employment income was 29,000. Saving income was 3,000. So non-saving income, saving income and dividend income. This employment income will come under the head of non-saving income. Bank interest will be coming under the head of saving income, that is 3,000 pounds. Dividend income, no dividend income. So this will give rise to our total income. What is our total income? Our total income for non-saving is 29,000 pounds. For saving income it is 3,000 pounds, and for dividend income it is 0. Less relief. Any relief is available? No relief is available. The order must be non-saving, saving and dividend. This will give rise to our net income. What will be our net income? Our net income will be same as total income. Total column 29,000, 3,000, 0. So this will give to 32,000. No relief. So our net income, total net income will be 32,000. So less PA. For PA, we need to see whether the personal allowance is getting tapered or not. When the personal allowance get tapered, when the ANI is above 100,000 pounds, if our income exceeds, if your net income exceeds 100,000 pounds, you must see whether your PA gets tapered or not. In this case, our PA will not get tapered because our income is less than 100,000 pounds, and if you calculate the ANI, it will be less only, because in the calculation of ANI, how the ANI is calculated, adjusted net income is calculated, net income less gross amount of PPC less gross amount of gifted donation. So personal allowance will be reduced in which order? Non-saving, saving and dividend income, that is 1, 2, 5, 7, 0. The whole will be reduced from the non-saving only, because we are having huge amount of non-saving income. So this will give rise to taxable income. What will be our taxable income? Our taxable income will be 16,430. Clear with this? And 0, nothing is available here. So this will be 3,000. So our total taxable income will be 19,430. So 19,430. What type of taxpayer he is? For the nil rate band, for the saving income, he is within the basic rate band. So nil rate band of 1,000 pounds will be available in case for saving income. So now we will be calculating the income tax liability. How will be calculating the income tax liability? Income tax liability. But keep in mind how the basic rate band will be reduced from the non-saving first, then the 5,000 rule, then from the saving income. In the saving income, the 5,000 pound rule, then the nil rate band, then the rest saving income. What I said just now, the reduction of the basic rate limit, that is 37,700. Income tax liability is calculated on the taxable income. So for non-saving, our income is 16,430, which is within the basic rate limit. Basic rate limit will reduce in the same order from the saving, non-saving, saving and dividend. So it will be taxed at 20%. This will give rise to an income tax liability of 3,286 pounds. Then we will be calculating for the saving income. Saving income we have bank interest. Bank interest. Now we need to see the first rule, that is 5,000 pound rule. Here please do see whether the 5,000 pound rule is available or not. The saving income must be within the first 5,000 of the taxable income, but our taxable income, total taxable income is 19,430, of which non-saving is only more than 5,000 pounds. So that 5,000 rule will not be available because our non-saving income is excess of more than 5,000. So 5,000 rule not available, not available. So the 5,000 rule will not be available. So not available means we'll be moving to the step number 3. So step number 3 will be step number 2, nil rate band. Nil rate band will be available of 1,000 pounds because he's a basic rate band, basic rate taxpayer, because his income is falling within the basic rate band. So 1,000 into 0 will be taxed at 0. The rest of the 2,000 will be taxed at 20% because it is within the limit of 37,700. This will give rise to 400. So the total income tax liability will be 3686 pounds. So now what is the basic rate limit left with you? The basic rate limit which is left is 37,700 minus 1640, that is this, and reduced by the 1,000 nil rate band, because the 5,000 rule does not apply, but it will not reduce. If the 5,000 rule applies, then only it will reduce the basic rate limit, then further by 2,000 amount. So this all will reduce and your basic rate limit will be left. Basic rate limit will be 18, basic rate limit 1827. This is for your understanding, students. This is not part of the answer. This is only for your understanding. So done with this. Now we'll be solving further one more question so that you have a good understanding. Please do pause the video here and please do try yourself this question. Please do try yourself. You need to try this question on yourself so that you get a better understanding. Please do pause and try yourself. So we will be starting. So X receives bank interest X receives bank interest of 7,850 pounds. This is saving income during the tax year 23-24. Calculate X income tax liability assuming he also has trading income. Trading income is non-saving income in the tax year 23-24 of 43,000. First situation is 43,000 of trading income. Second situation is 53,000 and third situation is 145,000. So we'll be solving it. So the first A, trading income. What is the trading income? The trading income is 43,000 and bank interest is 7,850 pounds. So we'll be solving this. So dividend income is 0. So here non-saving, saving, dividend and total column. So trading income, under which head it will fall? Under the non-saving, trading income 43,000 pounds. Bank interest under which head? Saving income, 7,850 pounds. Dividend, no information. So this will give rise to total income. What will be our total income? 43,000. This will be 7,850 and this will be 0. Our total will be 43,000, 7,850, 0, and a total income will be 50,850. Less relief. Any relief is available? No. This will give rise to net income. So net income and this will be same only because we don't have any relief available. So 43,000 pounds, 7,850 pounds, dividend income 0. Our total will be 50,850 less PA. We need to see whether the PA is getting tapered or not. Yeah or not. Our personal allowance is not getting tapered because our income is not more than 100,000 pounds. So the PA will be reduced from the non-saving income as we need to follow the order. So this will give rise to our taxable income. So what will be our taxable income? So our taxable income will be 30,430 and 7,850 as no personal allowance will be available. So our total taxable income will be 38,280. Clear with this? Now we will be calculating the income tax liability. Income tax liability is calculated on the taxable income. So the non-saving income, first non-saving income 30,430 into 20%. What will be our tax? Our tax will be 6,086. For the saving income, first we need to see the 5,000 pound rule, whether 5,000 saving income is falling within the first 5,000 of the taxable income. No, because our non-saving income is excess of 5,000, so that will not be available. Then we need to see the nil rate band. Which type of nil rate band is available for the saving income? As our total taxable income is higher, than the basic rate limit of 37,700, so he will be a higher rate taxpayer. X will be a higher rate taxpayer. So for higher rate taxpayer, what is the nil rate band? 500 pounds. What will be the nil rate band? 500 pounds into 0 is 0. So then 37,700 is our limit. So how much limit is left still? 37,700 minus 30,430 minus 500. So 6,770 into 20% as the saving income is falling within the basic rate limit. So this will give rise to a tax of 1,354. So what is the saving income still left? The saving income still left is 500 plus 6,700 minus 7,850. So 580 of saving income will be taxed at 40% because our basic rate limit is already reduced by non-saving income, saving income, nil rate band and the excess, and further excess will be taxed at higher rate. What is the higher rate? 40%. So it will be 232. So our total income tax liability will be 7,672. Clear with this? So now we will be solving for the B part. For the B part it is 53,000. B part, trading income. What is our trading income? Our trading income is 53,000 pounds. and our saving income bank interest is 7,850. So non-saving income, saving income, dividend income and total. So trading income will come under the head of non-saving income, that is 53,000. So total of this is 53,000. Bank interest will come under the head of saving income, 7,850. 7,850. Then dividend, no information. So this will give rise to our total income. Our total income is 53,000 pounds. For saving income 7,850. For dividend it will be 0. And here our total income will be 53,000 plus 780 will give rise to 60,850. Then less relief. Any relief available? No. This will give rise to, after reducing from the relief, will get our net income. Net income is same as total income, 53,000, 7,850 and 0. So our total net income will be 60,850. Less PA, personal allowance, will be reduced first from saving. We need to see whether personal allowance is getting tapered or not. It is not getting tapered because our income is not more than 100,000 pounds. So 12570. This will give rise to our taxable income. What will be our taxable income? 53,000 minus 12,570 will give rise to 40,430. Then saving income will be the same amount, 0. The total taxable income will be, our total taxable income will be 48,280. So now we need to calculate the income tax liability. Income tax liability is calculated on the total taxable income. So for non-saving income we have 40,430. This is exceeding the limit of 37,700. So first 37,700 will be taxed at 20%, which will give rise to income tax liability of 7,540 pounds. Then what is the further non-saving income? That is 40,430 minus 37,700. So this will give rise you to 2,730. This will be taxed at 40% because the basic rate limit has been used. So this will give rise to 1092 as income tax liability. Now done with saving, non-saving. Now we'll be moving to the saving income. Saving income, we have saving income of 7850. So 7850, first we need to see the 5,000 pound rule. As our non-saving income is excess of 5,000, so the first 5,000 rule will not be available for the saving income. Then we need to see any nil rate band for the saving income. For the nil rate band, we need to see the total taxable income. The total taxable income is higher than the basic rate limit. So for higher rate, what is the nil rate band? 500 pounds. So the first 500 pounds will be at 0. So 0. What is the rest amount? That will be 7,350 will be taxed at nil rate. The basic rate limit has been used. So now we are in the higher rate band. Higher rate band, saving income. What is the tax rate? 40%, same as non-saving. So this will give rise to 2,940 as your income tax liability. Your total income tax liability will be 11,572 pounds. Total income tax liability. Clear with this, students? So now we will be solving a further question, so that you will be having a good idea if how our personal allowance get tapered in this case. C part. In the C part, our trading income will be 145,000 pounds. 145,000 pounds. Bank interest will be 7,850 pounds. Clear with this? Now we'll be calculating income with non-saving income, saving income, dividend income, and total. So trading income, it will fall under the head of non-saving, that is 1,45,000 pounds. Saving income is bank interest is a saving income, so it is 7,850 pounds. So our total will be 145,000 pounds, 7850. So dividend income, no dividend income, so this will give rise to total income. Total income is, for non-saving is 145,000 pounds, for saving income it is 7,850 pounds, for dividend is 0. Our total will be 145,000 plus 7,850 will give rise to the total income of 152,850. Clear with this? After that, less any relief, no relief is available, so our net income and total income will be the same. Will be the same. 152,850 will be our total net income. From the net income, we'll be reducing our personal allowance. Personal allowance, we need to see whether the personal allowance is getting tapered or not, whether our income is greater than 100,000 pounds. Yes, our income is greater than 100,000 pounds. So what will be the ANI? ANI will be net income less gift aid donation, gross amount of gift aid donation less gross amount of personal pension contribution. Our net income is total net income is 152,850. No gift aid donation, no personal contribution, so our ANI will be 152,850. Clear with this? Now in ANI we had three rules. If ANI is less than 100,000 pounds, full amount of PA is available. If ANI is between 100,000 pounds and 125, 140, we need to use the formula, that is 50% of ANI less the limit. What is the limit? The limit is 100 our ANI is 152,850 less the limit of 100,000 pounds. So this will give rise to the difference of 52,850. So if you take the 50% of 52,580 into 50%, it will be 26,290. This amount will reduce the PA. As our ANI is greater than 125, 140, so PA will not be available. Understood with this? We had a good revision of the personal allowance also. So personal allowance of 0 will not be available. No personal allowance will be, because our ANI is greater than the. So this will give rise to our taxable income. Taxable income will be 145,000 for non-saving. For saving it will be 7,850, and for dividend it will be 0. So our total taxable income will be 152,850. Now we need to calculate the income tax liability. Income tax liability is calculated on total taxable income. Done with this, students. So now we will be doing further the total. So now saving income is, non-saving income is 145,500. So the first 37,700 will be taxed at 20%, that is 7,540, and the higher rate limit, as it is exceeding 125, that will be taxed at 140. So what is the difference? 37, this is 0 to 37,700, 37,701 to 125, 140. So what is the difference? We'll be getting a difference of 87,440 at 40%, as this amount is within the higher rate limit. So our tax will be 34,976. What is the excess above 125, 140 is 19,860. This will be taxed at 45%. So this will give rise to a tax of 8,937. Done with non-saving, because see how is the income tax calculated as a rule basis, rule scale, from 0 to 37,000 at 20%, from 37,000 to 125, 140, 40%, above 125, 140 at 45%. Now saving income. What is our saving income? 7,840. We need to see whether the first 5,000 pound rule is available or not. It will not be available because our non-saving taxable income is greater than 5,000 pounds, as our taxable saving income is not falling within the first 5,000 of the taxable income. Now we need to see the nil rate band. Nil rate band, we will see the whether is a higher rate basic or additional rate taxpayer. As the taxable income exceeds 125, 140, so he is an additional rate taxpayer. This his taxable income is falling within the additional rate band. Additional rate band means, what is the nil rate band available? That is 0. So our saving income will be taxed at 45%, as already we have used our basic rate limit, higher rate limit, and now we are in the additional rate band. So it will be 3533. So this will give rise to the total income tax liability. What will be the total income tax liability? The total income tax liability will be 54,986. So done with this. Now we are done with the saving income. Now we are done with the saving income. Now we are done with the saving income. Now we will be starting with the dividend income. Saving income, how saving income is normally taxed in the same way as non-saving. First 5,000 pounds you must see whether it is the saving income is falls into the first 5,000 of the taxable income. Then we will see the nil rate band available. If it's a basic rate 100,000, 1,000 pounds. If it's a higher rate 500 pounds, additional no nil rate band is available, then it will be taxed in the normal way as non-saving income. This also we have done. Now dividend income tax slab. Now we completed non-saving, saving and dividend income. Now we will be doing dividend income. Dividend received from a company are charged to income tax in the tax year in which they are received. For non-saving, for the saving and for the saving income we studied when it is received, and for the dividend income we studied when it is received. We will be taxing it. So tax rates for tax rates on dividend. What are the tax rates we'll be studying? As mentioned by me, the 5,000 rule for the saving income will only be available. The special rule is only available for the saving income. It is not available for the non-saving and dividend income. But in saving income, we had the nil rate band. In the same case, in the same case, in the same case, we also will be having a nil rate band in the dividend. The first £1,000 of dividend income falls in the dividend income nil rate band and is therefore tax free. What is the amount of nil rate band here? £1,000. Here it is provided to all taxpayer, whether he is a basic rate, or a higher rate or additional rate. But in saving income, we had the rule that for saving income nil rate band, you must see whether he is a basic rate or he is a higher rate or he is a additional rate. The total taxable income falls under which band? If it is falling in basic rate, £1,000. If it is falling in the higher rate, it is £500. Additional, 0. But in case of dividend, £1,000 is available to all taxpayer, whether his total taxable income is falling in the basic rate band, higher rate or additional rate. Now we will be studying the tax rates for the dividend. The tax rates for the dividend are very different from the non-saving and saving income. So, what is the order to calculate the tax? Non-saving, saving and then dividend. First we'll calculate this, then this and then this. The limits of the basic rate, higher rate and additional rate will be reduced according to non-saving first, then saving, then dividend. So for dividend we are having the rate. If the dividend falls within the basic rate band, then it will be taxed at 8.75%. Higher rate will be taxed at 33.75%. Additional rate will fall at 39.35%. This will be provided in this sheet. This and the for the saving income, this will be provided, and this will also be provided in the tax sheet of your exam. So clear with this? The dividend rates for the basic rate, if the dividend income is falling within basic rate, it will be taxed at 8.75. For higher rate, it will be taxed at 33.75. For additional rate, it is 39.35. So now we will be doing some example questions so that you get a better understanding of the dividend income. See, what is the approach? See, the limits of 37,700, 125, 140 will be reduced according first by non-saving income, then saving income, then dividend income. In non-saving by the taxable amount, saving income also by the taxable amount. In that first 5,000 rule, nil rate band, then the excess. In dividend, £1,000 for each taxpayer, whether he is within the basic rate limit, higher rate limit or additional rate limit, then excess amount of dividend. Clear with this? So now we will be starting with this. Apply the appropriate rates of tax on dividend income. What is the approach? How to calculate the dividend income? Dividend income is taxed as the top slice of the income after the non-saving and saving income. This dividend income is the top slice of income, means last slice of income. First we'll calculate the tax on non-saving, saving and then on dividend. First, second and third. So this is last slice or top slice. The dividend rate, nil rate bands applies to first £1,000 of dividend income. Unlike the saving starting rate, which only applies in certain limit circumstances, and saving income nil rate band, which depends on the tax position of the individuals, the dividend nil rate band always applies to the first 1,000 of dividend income, whether his tax position, whatever is his tax position of the individual, whether he is higher rate, additional rate, or basic rate. The dividend income tax at the dividend rate reduces the basic rate limit, higher rate limit when determining the rate of tax on the remaining dividend. Same what we studied, that that the band of 37,000 basic rate limit will be reduced by the nil rate band of dividend first, then by the excess, this then higher rate, same as the saving income. Any remaining dividend income is taxed as the special dividend rates set out above. That is, within the basic rate limit, it will be taxed at 8.75 percentage, higher rate limit 33.75 percentage, and additional rate 39.35 percentage as mentioned. So now we will be starting with the question so that you have a better understanding. So we'll be starting with this. See, X earned employment income of 14,850. 14,850 is the employment income. Received dividend of 4,500 in the tax year 23-24, and payee of 6,000 was deducted in respect of the employment income. Calculate X income tax payable for the tax. Here we need to calculate the income tax payable. So we'll be starting. So non-saving, saving, and dividend income and total column. So employment income will come under the head of non-saving, and we need to take the gross amount because already we have a pay, but during the computation of our total income tax liability we need to calculate using the gross amount, and when we calculate our total income tax liability, the pay will be reduced from the income tax liability, which will give rise to income tax payable. Then no saving income, so total of saving income will be 0. Dividend income, they have given the dividend income of 4,500 pounds. So this will be our total income. 14,850, saving income 0, dividend it will be 44,500, and total of this will be 19,350. So less relief, no relief is given. This will give rise to net income. Net income will be same as the total income because no relief is available. So total income and net income will be the same. Now personal allowances, less PA. Personal allowance will be available of full amount because the personal allowance will not get tapered as our income is not more than 100,000 pounds. 12570. So this will give rise to our taxable income. What will be our taxable income? Our taxable income will be 2,280, and for this will be 4,500 because the personal allowance has been used by the non-saving income. So our total taxable income will be 6,780. Now we will be calculating the income tax liability. Income tax liability is calculated on the taxable income, not on the net income and total income. Taxable income. So non-saving income is 2280 into 20 percentage. This will give rise to the income tax liability of 456. Now saving income, nothing is available, so 0. Dividend income is available of 4,500, but we have a nil rate band of 1,000 pounds at 0 rate, so this gives to 0. And what is the rest amount? 3,500 will be taxed at, as this is within the limit of basic rate limit, so will be taxed at what rate? Base dividend falling within the basic rate limit will be taxed at 8.75 percentage. So this will give rise to an income tax liability of 306. So our total income tax liability will be 762. This is our total income tax liability. But we have a payee. Payees of 600 as mentioned in the question. 600. So total income tax payable will be 162. So clear with this? We'll be doing one more further question so that we get a better understanding. X earned employment income of 34,250 and received a dividend income of 17,500 in the tax year 23-24 and has a payee of 3,680 was paid in respect of her employment income. Calculate X income tax payable for the tax year 23-24. So now non-saving income, saving income and dividend income. Employment income falls under the head of the non-saving income. So no saving income, total is 34,250. Then no saving income, dividend they have given us 17,500. So total dividend income is 17,500. So this will give us the total income. Our total income will be 34,250. Saving income 0, 17,500. So our total income will be 51,750. Now net income will be the same as, so no relief, less relief, no relief is available. So our total income will be same as, our net income and total income will be same. 0, 17,500. Now we need to reduce the PA. First we need to see whether the PA is getting tapered or not. No, because our income is not more than 100,000 pounds. So PA is 12,570 pounds. So this will give rise to our taxable income, because after reducing the PA we get our taxable income. So what will be our taxable income? So our taxable income will be 21,680, and for saving no, and dividend will be 7,500. Our total taxable income will be 39,180. So now we will be calculating the income tax liability. Income tax liability is calculated on the taxable income. So non-saving income is 21,640. So is within the basic rate limit. So into 20%. So this will give rise to an income tax liability of 4,336. Then no saving income, dividend income. What is the limit? The limit is, basic limit is 37,000. So 21,680 minus 37,700. So the basic rate limit is remaining is 16,020. So as the dividend amount of total, that is 17,500, which is taxable, but only 16,020 is lying within the basic rate limit. So basic rate limit means 8.75%. This will be taxed at, so it will be taxed at 8.75%. The total income tax liability will be, total taxable liability for 16020 will be 1,314. So the dividend income above basic rate limit is 17,500, 16,020. So what is this amount? This amount is 1,480. This will be taxed at higher rate. What is the higher rate for dividend? 33.75. So this will give rise to an income tax liability of 500. So our total income tax liability will be 6150. As in the question we have our payee, so this is our total income tax liability. So our total income tax liability is 6150. So payee is, what is the amount of payee? The payee is 3680. This will give rise to total income tax payable. What is the total income tax payable? It will be 2470. Clear with this? Now we have done a lot of questions. We have done two questions for the saving income and the dividend income. Now excuse me, this is an question which this question comprises of everything. X receives dividend income of 1500, bank interest of 375 in the tax year of 23-24. He also has a trading income. Assuming his trading income in the tax year is 15,500, 51,595 and 149,875. This question is a comprehensive question, covers all types of incomes. All types of income, covers all types of income. So we will be doing, so here dividend income, see here the dividend income is fixed of 1500 and bank interest is fixed. Dividend is dividend and this is saving income, but the trading income varies 15,500, 51,595 and 149,875. So we will be solving this question also, as this will give a overall view of all the types of calculation. So first, A, employment income, trading income is 15,500, bank interest is 375, dividend income is 1,500. So non-saving income, saving income and dividend income, and this is total. So trading income under the head of non-saving income, saving, so total non-saving income is 15,500, bank interest will come under the head of saving income, that is 375. So total saving income is 375, then dividend income, that is 1,500. So this gives rise to our, this will give rise to total income. This will give rise to total income. What will be our total income? Total income will be, our total income will be 15,500, saving income 3,375, dividend income 1,500. So our total income will be 17,375. Less relief, no relief is available, so this will give rise to net income. So our net income will be, and total income will be the same. So 15,500, 375 is your saving income, 1,500 is your dividend income. So your total income and net income will be the same. Now we need to reduce the personal allowance. Personal allowance will not get tapered because our total income does not exceed 100,000 pounds. So personal allowance will be reduced in which order? In the non-saving, saving and dividend order. So this will give rise to our taxable income. Our taxable income will be, what will be our taxable income for non-saving? 2930. For dividend it will be 375. and for dividend it will be 1,500. So our total taxable income will be 4,805. Now we will be calculating the income tax liability. Income tax liability is calculated on the taxable income. First we need to calculate the income tax for non-saving income. Non-saving income is 2930. It is within the basic rate limit, so at 20%, which is 586. Saving income, bank interest 375. First we need to see whether the first 5,000 rule applies. As to see whether the saving income falls into the first 5,000 of the taxable income, as our non-saving income is less than as a non-saving taxable income is less than 5,000, so saving income of 375 will be falling under the first 5,000 rule. So zero tax will be taxed at this. Then we need not see the nil rate band because only our income is 375. Now we will be moving to the dividend taxation. First we calculated the tax on non-saving, saving, and then on dividend. As in dividend we had £1,000 nil rate for all types of taxpayer. So for £1,000 it will be at zero rate, so this will give rise to 0. So our basic rate limit is 37,700. So the rest of the dividend of 500 is falling within the basic rate limit, so will be taxed at 8.75%. So the tax will be £44. So the total income tax liability will be 586 plus 44, that is 630 will be our total income tax liability. Clear with this? In this question we dealt with all the types of income, and we got the answer. Now we will be moving to the further case. What was the further case? The further case was our trading income will be 51,995, and our bank interest and dividend income will be the same. Bank interest will be 375 and dividend will be 1,500. Clear with this, students? Now non-saving income, saving income, dividend income, and total column. So trading income falls under the head of non-saving income, so our total will be 51,995. Bank interest will come under the head of saving income, that is 375. The dividend income is 1,500. So this will give rise to the total income. Total income will be 59,995, 375 and 1,500. So our total income will be 53,470. So less relief will give rise to net income. So our net income and total income will be the same. 51,995, 375 and 1,500. So our total and net income will be the same, that is 53,470 less personal allowance. Personal allowance will be available full, as our PA is not getting tapered because our net income is not more than £100,000. So after reducing this, we will be getting our taxable income. What is our taxable income? Our taxable income will be 39,025, and for saving income 375, dividend income 1,500. The total taxable income will be 40,900. 900. Now we need to calculate the income tax liability. Income tax liability calculated on the taxable income. Clear with this? For non-saving, as the non-saving taxable income is 39,025, this is greater than the limit. So the basic rate limit of 37,000 till the basic rate limit of 37,000 will be taxed at 20%, will give rise to 7,540. The excess amount of, what is the excess amount? The excess amount of non-saving income is 1325, will be taxed at 40% as basic rate, higher rate. So this will give rise to the tax of 530. Now we need to move to the saving income. Saving income, first 5,000 we need to see whether the saving income is falling within the first 5,000 of the taxable income. It is not following because our NSI, non-saving taxable income, is more than 5,000. So the saving income of 375 will be taxed at what rate? The first special rule is not applying. Now we need to see the nil rate band. The nil rate band will be available because he is a higher rate, as his income is falling within the higher rate limit. Higher rate limit means 500 pounds of relief will be available. Nil rate band, saving income, nil rate band of 500. So the 375 will be taxed at 0. This will give rise to 0. Now dividend income, the dividend income of 1500 needs to be taxed. In this 1500, the 1000 is the basic rate, nil rate band, dividend income nil rate band, whether what type of taxpayer he is, whether his income is falling in the basic, the total taxable income is falling in basic rate, higher rate or additional, he will be getting the nil rate band of 1000, that is 0, and the rest 500 will be taxed at 33.75 because this is following, this is within the higher rate limit. So the tax will be 169. So our total income tax liability will be 8239, 8239. So now we will be doing a last question for this session, and in the next session we will be completing this chapter. Now as the video will get too long, so the third case, the part C, we will be doing here. So now we will be doing the part C in that. What was the part C? In the part C we had trading income of 149,875 and bank interest will be the same, that is 375. Saving income, dividend income will be 1500. So non-saving income, saving income, dividend income and total. So trading income falls under non-saving income, that is 149,875, 149,875. Then bank interest will fall under the head of saving income, that is 375. Dividend income of 1500. This will give us our total income. Our total income will be 149,875, 375,500. This will give us total income of 151,750. So less relief, no relief is available, nothing is mentioned about the relief. So our total income and net income will be the same, 149 875, 375 and 1500. So our total net income will be 151,750. Less PA. For PA we need to see whether PA will get tapered or not. As our income is more than one as our income is more than 100,000 pounds, so our personal allowance will get tapered, and personal allowance for tapering we need to calculate the ANI. ANI is net income less gross amount of gift aid donation, gross amount of PPC. So our net income was 151,750 less this, so we will be getting ANI as same as net income. As our ANI is more than 125, 140, so no personal allowance will be available. So our taxable income will be same as our net income, because nothing is available. 151,750. This is our total taxable income. Now we need to calculate the income tax liability. Income tax liability is calculated on the taxable income, non-saving income. As the non-saving income is greater than the basic rate limit, so 37,700 will be taxed at 20%. This will give rise to basic rate. This will give 7,540, and for the higher rate, as it is exceeding more than 125, 140, so the difference 87,440 will be taxed at 40%. This will give rise to 34,976. Then what is the rest amount in the additional rate? The additional rate will be the difference between 125, 140 minus 149,875. So the difference will be 24,735 will be taxed at 45%. This will give rise to the tax of 11,131. Now then we will be calculating for the savings income. Saving income is 375. See the first 5,000 rule. Saving income lies between the first 5,000 pounds of the taxable income. No, as our taxable income is non-saving taxable income is greater, so the first 5,000 rule will not be available, so will be taxed at, as the basic rate higher rate limit is used, so saving income will be taxed at 45%. so 45% means 169. Now nil rate band will not be available. First 5,000 will not be available, and nil rate band also will not be available, because here we are at additional rate. For additional rate, no nil rate band. Nil rate band is 0. Now dividend income. For dividend income, what is the dividend income? 1,500 is the dividend income. But we have a nil rate band of 1,000. Whether he is and basic rate, higher rate or additional rate taxpayer, this will be taxed as 0. The rest of the 5,000 will be taxed at additional rate of dividend, as the basic rate limit and higher rate limit has been used by the non-saving income and then saving income. Now the dividend will be taxed at additional rate. The additional rate will be 39.35%. So this will give rise to 97 pounds of income tax liability. So our total income tax liability will be 50,000 54,013 54013. This is the total income tax liability we need to pay. as they have not mentioned anything about payee, as it is not an employment income. We are dealing with trading income. So today we had a lot of question practice. I hope the saving income and the dividend income rules are clear to you. So today, in today's topic, in today's class, we covered these topic: saving income nil rate band, that is saving income if the saving income falls within the first 5,000 of the taxable income will be taxed at 0. Then we need to see whether any nil rate band is available. Nil rate band for basic rate taxpayer it is £1,000, for higher rate it is £500. How we will determine whether he is a basic rate higher? We need to see whether his total taxable income is falling in which type of tax band, whether in basic rate. If his total taxable income is falling within the basic rate band, he will be getting a nil rate band of £1,000. If the total taxable income is falling within the higher rate limit, he will be getting the 500. And if the total taxable income is falling within the additional rate band, so no band will be available, nil rate band. Further, the excess income will be taxed as normal saving income, that is at basic rate limit 20%, higher rate 40%, additional rate 45%. Set off of reliefs and personal allowance: non-saving income first, then saving, then dividend income. In this order only you need to set off. Now for dividend income, dividend received from the company will be charged in the tax year when it is received. So the tax rates on dividend income also has a £1,000 nil rate band, £1,000 nil rate band. Whether what kind of taxpayer he is, whether his total taxable income is falling within the basic rate limit or higher rate limit or additional limit, there is a fixed £100,000 nil rate band. £1,000, not 100,000, £1,000 nil rate band. So further dividend income will be taxed. If the further dividend income is falling within the basic rate band, it will be taxed at 8.75%. If it is falling within the higher rate band, it will be taxed at 33.75%. If it is within the additional rate, it will be taxed at 39.35. So in today's class we covered the saving income and nil dividend income, and we did a combined question See here, we did a combined question. This one, this is the whole combined question we have solved today, including all the types of income. So do not get confused with this. So as the class has got too long, so in the next class I will be ending today's session here only. In the next class we'll be covering the individual saving accounts. Further rules are there, theory, then accrued income scheme we'll be discussing in the next class, and married couples and tax partners, tax planning, what are the tax planning opportunities. So I hope today's class was very interesting and you understood the concepts and had a good understanding. If you have any doubts or any queries, please do message in the WhatsApp group, as I have already shared my WhatsApp number in the previous session. So please do send me, please do not call me, please do send me message. I'll add you in the tax group so that you can ask your queries and clear your doubts. So ending today's session with a good note, and I hope you understood the concepts. So in the next class we'll be completing this chapter. I hope you had a good class. Thank you. All the best for your exam, students.